This is Max Gagliardi. You're watching Talk.Energy Insights. We've got a special episode today, but before I get into that, if you're watching this, you should subscribe to the YouTube channel or follow us on your favorite social media app. I'm here with my co-host David Heikkinen, and we've got a special guest today, Dan Pickering, here to join us. We're going to talk about a number of different things, but Dan, welcome to the show.
Glad to be here. Thanks for including me.
Thanks, Dan.
Heike, you want to launch into the market stuff, and then we'll get into the meat and potatoes?
So the worst news of the day is in the bottom of the first. The Cubs are up 3-0 on my Cards, but this may be the last time we actually do one of these on a Cardinals-Cubs day if things don't reverse themselves. But I got a little bit of hope, or I wouldn't be a Cardinals fan. But and given Dan's from Missouri, I thought I'd bring it in as well. But every week we talk through where the markets are. We've done these the last, I guess this is number 5. Markets actually are S&P's at 43.67 over the last 5 days, up about 1%. But crude oil markets I thought would have been a lot worse a week ago, but we're at 75.64. Brent on and just below 75 on WTI, actually only down 0.8%. Natural gas still rocking and rolling,
hanging in there,
kind of holding in. So people are happy there. I'm gonna have to add propane to this. We're killing it on the propane side too, and so NGL prices are going to be pushing $40 a barrel, and we got Bitcoin at 33,400 roughly. So it's been kind of a rocky 5 days on Bitcoin, and then copper up a little bit as well. So across the markets, we're getting a little bit of inflation potentially, a little bit of OPEC plus fight happening, and the big news for us was we're able to finally announce that Pickering Energy Partners and Heikkinen Energy Advisors merged, and we closed it last week and put out the announcement this week, and it's just been gangbusters as far as talking with companies and talking with investors. I mean, it's a big deal for me personally and for us as a firm, and I think we're now PED Insights, and we'll still be talking through and thinking about the whole oil and gas sector as our core, because energy is our core of our business, but adding technology and adding mobility as we branch into solar, wind, EV, AV, so electric vehicles and autonomous vehicles, and we'll go into hydrogen, and then we got the wild west of the SPACs that I think there's going to be a whole lot of supply chain opportunities as we work with Dan. But thought it'd be helpful for Dan talk a little bit broadly about Pickering Energy Partners, and we could just talk through the commodity markets and where things were. But thanks for coming on, Dan.
Yeah, it's good to be here. I'm a little embarrassed. I'm the only guy that doesn't have a headset on, so hopefully that doesn't impair me from being able to contribute today. Heike, you asked about Pickering Energy Partners. The interesting thing here is Pickering Energy Partners 1.0 started in February of 2004. So this is a old young business, if you will, because version 2.0 really just happened back in September of 2019. But we're an energy-focused financial services firm. We do a number of different things. We started as an asset manager, and we manage about $1.5 billion for our institutional and high net worth clients. About half of that in public securities across the natural resources space, and almost all that long only. And then the other half in private investments, primarily in the upstream, primarily in oil and gas. We've got a consulting business that helps clients figure out answers to questions, and that's energy companies and institutional clients as well. We've got an investment and are close to an electric vehicle charging infrastructure services business called Merge. And we've got the PED Insights business now that you and I can finally announce, the thing we've been brainstorming on for probably a year. And the other piece of the business that we're going to be much more active in over time is we want to do advisory services primarily around the energy transition. And so we'll help companies raise capital and do M&A stuff there as well. And so, Max, when you think about us, the reality here is we're very committed to our core oil and gas roots. The energy transition and everything that's happening in new energies, it's big and growthy. And I think anybody that's going to be credible in energy needs to be able to talk about both. And that's what we're focused on being able to do.
Well, absolutely. And having this platform that you guys are building or that you have built and that you're adding to, I think can be really powerful. I mean, look, at the end of the day, knowledge and business intelligence is a huge deal. And when you've got, this kind of multi-services that you can offer, you're gathering a lot of different business intelligence. You gather up a lot of smart people, and you can put those people to work in different ways. I think you're exactly right. I mean, look, we've got the energy transitions here, or at least that's where things are moving. You've got capital that's very interested in going into that space. But the reality is oil and gas is going to be intertwined, very much so, with these themes. And I think that there's going to be some things here that whether people like it or not, we're going to produce oil and we're going to produce gas. And there's ways to do it in ways that comply with ESG or that, have that theme. And that also, look, can you make it better? Can you make it cleaner? Can you put it in the energy transition? There's all kinds of different themes that are going to work together there. And so I think that it makes a lot of sense with the platform, the way you guys are doing it. I'm excited to see where it goes. And I'll kick it back to either you or Heikkinen about what are some of the things you're most excited about. I know you talked about what you guys want to do, but what are some of the things you said you brainstormed it for a year? What gets you excited about this new venture?
Yeah, and so at our roots, and this is something that not everybody knows, but Dan and I went to the same school, and Dr. Caterus gave me a $500 petroleum engineering scholarship, and I think was his advisor at Missouri Rolla at the time, and now Missouri Science and Technology, and that's why I ended up in the petroleum business back in 1992. So a little older. I think Dan looks younger than I do at this point. That's why I wear a hat, but. The reality is like we got together in 2005 as well. December of 2005, I joined Pickering Energy Partners, and we enjoyed working with each other. And that's probably the thing that I'm most excited about is that the team that Dan has pulled together. I kind of got embedded in this business in the 1st of March, and just the network of people that we have internally is something that I think is what's going to really drive our business forward across each part. And the structure of how we're set up, it is a very logical internal business structure that is a producer culture. And what gets me excited is we think we can set the tone for the ESG movement with 2 people we hired in the ESG consulting business. We think we can help out oil and gas companies. At HEA, we had embedded engineers and financial people inside of oil and gas companies since 2014, and we hired 2 really smart guys from Wood Mackenzie, and kind of have 6 total people in our consulting business that just sit right down the hall from me now in the offices. And we kind of siloed and Chinese walled off all the investing side, so I don't know what they're doing, and they don't know what our ratings are going to be. But we sit down every Tuesday and really have an idea dinner of in the morning of what is going to be the most impactful thing around making investments. And right now, I'd say one of the things that we're focused a lot on is the Shell transaction we talked about 2 or 3 weeks ago, Max, of what does Shell do and why are they exiting the Permian potentially. And we have some valuation thoughts around it, but it's going to set the tone for where the integrateds are, like how are they thinking about their transition. What is it going to be from the buyers? Like, does an integrated company in the U.S. buy from a Euro integrated? Is it one of the independents that buys it? What's the price paid and the implications for valuation on the rest of the sector? And whoever buys it, do they accelerate activity from the 9, 10, 11 rigs that Shell's been running? And if they buy it, can they get equity off to the public equity markets if they need to put $3 or $4 billion of capital out to get it funded, or does Shell take equity from one of these smaller companies relative to Shell? I mean, it's probably the most interesting thing that came out of our conversation, and we were able to write some research about it, and you can get that on. It's still HEA Connect. It's rebranded PED Insights, and we'll be continuing to do some rebranding, but. I think that conversation that we had internally turned into research that then turned into something that is going to matter a lot over the next 6 months. And Dan, I don't know what gets you excited, but they're already making us smarter, and hopefully vice versa.
Yeah, I think, Heike, you highlighted the opportunity set around what we're doing together. And if we take a step back, what I'm most excited about, I guess, right now is it has been a hell of a grind since 2014.
Yeah.
And, most of the people that listen to this stream or podcast are probably in the energy business and they know how tough it's been. I'm not whining. It's so much more fun to interact in an industry where things are getting better as opposed to getting worse. And I think that's happening in the oil and gas business, and I think it's happening in the energy transition space. And so what I'm excited about is it's much more interesting, fun, and sustainable to be thinking about where you put your money as opposed to where you pull your money out of, right? What do you go toward instead of what do you run away from? And I think we've got a couple of years of runway here where the commodity is going to be decent. U.S. shale screwed up the story in 2014. I don't think they'll screw it up, at least for a while. So OPEC seems to be holding it together, notwithstanding this latest spat. And so, I think we've got some runway for a decent couple of years. And a bunch of people are scared to death about the energy transition. And that means we're climbing this wall of worry. And so I can go out and buy stocks that discount $58 a barrel when the front month's 75.
Yeah.
I mean, come on. That's got to be fun.
Yeah, there you go. So I agree. Like, when just to give you some time reference, and I've told David this, like when we started our company, it was 2014, and I've made the joke a lot, but it was like we started it and oil was $85, and in about 6 months it was $30, and it seems like it's been in one downturn ever since then. Although there's been a lot of opportunity the last 7 years, I think. Guys that have done good things, guys that have done bad things. Going into this new era, though, I think there's just a lot of question marks around, and this is kind of my next question. I'll start with you, Dan, but what is the energy transition? What is even ESG? We talked about it last week. Like, what are, I think when I've talked to a lot of investors, private equity and institutional, I get a lot of different answers from people when I ask this question, because as somebody who's tried to deploy capital in the infrastructure side, we're very interested in what people want to pursue. And I get a lot of different answers, and I get some confusing answers around what this actually is. Dan, maybe that's a loaded question, but kick it to you. What is the energy transition? What's going to happen here?
Yeah. You hear people say, I hate the word transition because energy is always transitioning. And Heike, I think I've heard you say that. I think you've got to label the new stuff something, and energy transition seems to have been captured.
Right.
You've got your traditional hydrocarbon business.
Yep.
And then you've got a world that wants to decarbonize. Mm-hmm. And by definition, those are two very different things, but they are linked, because we're not all going to jump in EVs tomorrow. We're not all going to have wind power, through our light sockets immediately. And so this energy transition, from my perspective, is the world wants to decarbonize, and we're past the tipping point on that. Greta Thunberg and individuals want to do it. Institutional investors want to do it. Corporations, way far ahead of regulations. Amazon, Apple, Google, et cetera. But right? Shell's net zero by 2050. There's a bunch of energy companies that have made a net zero pledge. So corporations and governments, European governments have been there for several years. Now ours is headed that way too. So we're going to make an effort to decarbonize, and that's not a science thing. It's a reality thing about what's going to happen for the next little while. Whether we can be successful at it, to be determined. But in my mind, it's figuring out how we get carbon down, and all of the associated technologies and processes. To me, that's the energy transition. And it's very different, I think, Max, ESG to me encompasses all industries. It's
Right.
it's not a trend, or it is a trend, but um, it's a way of running your business that happens to apply to oil and gas because of the E, but ESG applies to everybody, and the two are different. One's decarbonization, the other's how you run your business. And so they get linked a lot because of the E piece, but
Right.
in my mind, they're different.
Sure. Hike, what do you think?
And we've tried to talk through the opportunities around the technology that is empowered. The shale revolution is, there were a lot of opportunities there, and I think that the same thing that is happening, on hydrogen or on battery technology or on solar, like, there's some really great solar inverter companies that have incredibly powerful margins that now are going to move into batteries and storage at the residential level, and then that integrates into your EV charging at your home, and or is it going to be at the workplace? And there's differentiation on tech that I think is where we're going to make money. It isn't necessarily on the service side or the people that install the wind farm or the people that build out the big solar plant or build out the electrolyzer. It'll be in some of the components that actually feed into that. And then, Dan has said it, and I'm going to use his phrasing, but there's going to be trillions of dollars invested every year for the next 10 years across this whole thing. And we're not going to actually know what was the best investment until 10 years from now. But as that's invested, the feedstocks that go into that I thought it was interesting. BP Statistical Energy Outlook having a lot of details on, what are the feedstocks in their spreadsheets for the first time, like. And what are the midstream, like what are the chemical refining capacity and who owns that and where's that opportunity, and it's not, maybe someone will be smart enough to figure out the exact right battery chemistry and find that out of the 100 SPACs that are out there. But if there's this lithium supply model or this cobalt supply model or graphite or copper, there's going to be opportunities to be long and short and just make a lot of money. And that's really our goal, is to figure out a way to help people understand those things. And it's the biggest problem and puzzle. Oil and gas is complicated. Like that's, being a petroleum guy and knowing and helping people understand the shale revolution. When I started, it was like you invested 60% of your capital from a budgeting standpoint because you had no clue what you're going to do in September. Like you're hoping offshore that you would make a discovery or figure out something else to drill, or you're going to buy something and you'd use that to make up the wedge, is what we called it, a shell. Like you have your production forecast of what and then there's a wedge that you got to deliver to maintain volumes. Well, the shale revolution changed that, and it changed the certainty of production, but it degraded the certainty of returns. And now we've got an industry that really is positioned in second quarter and going into third quarter of, it's almost a golden age for the sector. And I've said this to a bunch of investors over the last couple of days that I've talked to, but the last time the upstream space had this free cash yield, I don't want to say it too loud, actually, it was September and October of 2014. And like the UAE, debacle potentially was like, oh no, this is rhyming. Like, please don't do this. We started our business in 2013 and really were live in 2014 across upstream and oilfield services and midstream, kind of the same way. And luckily we were able to position and help people understand supply dynamics for North American oil and natural gas, right as North American oil was driving the globe. We think we can do the same thing again, across the spectrum of a lot of the inputs around energy as a whole. And when I say energy, it's not the 3% of the S&P 500, it's the 20% that makes up technology, energy, and mobility. And I really do think the world's going to move in this direction and start thinking about our sector more broadly, because that's where it ought to be. And the other factor is you never want to be with the consensus. And so we're either crazy crazy like a fox with the expansion we're doing in the oil and gas space, and we're all in. And so some people have wondered, like, hey, are you writing a bunch of stuff on the transition because you're abandoning what you're doing? I can't figure out a way to evidence the fact that we're doing the opposite any more than by the fact that we're saying it and we're doing it and we're hiring people, and that's our view and that's our outcome. I think you have to understand the rest. If you don't, you don't have a seat at the table, and you won't be in the right position. But I mean, we're all in on energy, and we're all in on technology, and we're all in on mobility, and those things fit together.
Well, let me tell you, and you've heard some of this before, and I'll tell you, I don't know what the energy transition is or what it's going to be, but I've kind of tried to break it down into some core principles of what I think it has to be for it to work or for it to be a real thing. And you heard me say some of these, but I'm going to run through them. I think number one, it has to be better products, better services that enrich people's lives and make people's lives better, right? It can't just be this thing is shiny or this thing is cool or this thing is a thing that capital providers want to do. It's got to actually lift people up and have, do things in people's lives that the consumers want or that are going to enrich the consumers in some way. I think it's to be very difficult to do everything top down. I think, just because you throw a lot of money or a bunch of regulations at something, it's hard to get big sweeping changes to happen efficiently without hurting capital or destroying capital, like you've mentioned, Hike, unless it is bettering consumers and through either better products or better services or better energy. I think number two, it has to be at some level deflationary, and what I mean by that is that the costs have to come down, and it can't just be the cost of solar panels. It has to be the cost of energy. It has to be able to show, like, for example, nat gas or oil, or the way that we've been able to use hydrocarbons in this last energy transition. Costs have come down. It's been deflationary, and that, again, it lifts people up and it makes energy, makes things better. I think if things just go up in price and it causes things to get more expensive, I think that's also going to be a lot of friction there, and also a lot of chances to destroy capital. And then I think the third thing is it actually has to meet the goals, right? It actually has to be better for the E. So, for example, offshoring stuff, like if Shell sells the Permian and, like you said, someone doubles the rig count, they didn't really lower their carbon footprint. They just passed it off and someone doubled the rig count. Or, for example, if California bans fracking or oil production, or if the U.S. continues to ban it on leases and it's produced somewhere else over in OPEC, that's probably not going to help the climate either, or to meet these environmental goals. So I think that sounds really simple to say. It has to actually work, but it actually has to do those things the goals that it set out to do. And I think if you can check those boxes, then I think there will be an energy transition. But I've been slightly cynical on a lot of this stuff, and it's not just because I'm an oil and gas guy. It's because I try to think critically. And trust me, I'm with you guys in the sense that I want to figure out how this new world's going to look like so I can be a part of it. But at the same time, I just feel like there's some basic things it's got to check if it's going to be successful. But I don't know if you guys agree or disagree with any of that stuff.
Dan? I talk to Max a lot. I think yeah.
I liked you basically said, I wrote them down. People's lives need to be better. It can't just be top down. It's got to meet the goals. What I would say is the goals. People have different goals.
Right.
If you think net zero by 2050 is the goal, I think that's an admirable goal. I don't think it's a realistic goal.
Yeah.
And so I think we're going to have to make shorter, more achievable goals if you have a chance of getting there. And one of the things, if you read the IEA's net zero report, which is a fascinating read, their assumption is we will bring 2 billion incremental people. We're going to make their lives better with more available energy, and overall energy consumption is going to go down. That math does not compute at all. And so I think that the sad realization for a bunch of people over the next 2 to 5 years is that our lofty goals may be the right goals, but we got the wrong timing associated with them.
Sure.
And that's going to be a disappointment to a lot of folks who, want to see big changes fast.
Sure. Yeah.
And I think that that's also going to be a real value enhancer for the existing. I sit there and say, when people realize that instead of this being the time frame where oil and gas is relevant, if it's this, sorry, I can't tell how much you can see, but the whole point is, if you're only valuing this and you ought to be valuing this, the incremental chunk is coming. And so I got to get there first. And if you're there first, you're going to make a lot of money in the oil and gas stuff. So energy transition is going to be something we're talking about a lot. The industry, for a long time, one of the things that's real clear is that, and I think this is good, is I think all the oil and gas companies are trying to figure out what they're going to do long term.
Right.
And BP made this massive pivot really, really quickly, but almost every public oil and gas company, I think, is saying, what do we need to do? And when do we need to do it? And that's a good exercise to go through, even if the conclusion is we're going to keep doing exactly what we're doing, only try to be a little bit better at it from the E perspective. So lots and lots to happen. I loved your 3 points. I just focus on these goals and getting practical goals. And I don't think the world's there yet, and it'll probably be a bit of a rude awakening.
Yeah, it'll be interesting to watch, and we could talk about it a bunch. And in fact, we're probably going to talk about it a bunch in the things that we do, because like you said, the oil and gas industry is focused on it. Capital providers are focused on it. A lot of people are focused on it. Politicians are focused on it. But this show can only go for so long here on a Friday afternoon, because we all have things like Cardinals games that we want to be paying attention to.
Max,
go ahead, Hike.
Max and Dan, I've got one question for you, by the way. As we keep going, it's 2-3 Cardinals. So we're down by 1 run.
There you go.
So I might actually stay on my own and just this seems to be working now. And we're going into the close, so I'll let Dan drop off. But the reality is I think that there's this real dichotomy between Shell's strategy and BP's strategy. When they've been, as a fan of the prize and the legacy of these companies, Shell Transport and Trading, and they've got large gas trading at BP. Max, you deal with a lot of these people in your marketing side, and we can talk some about it. But like those guys are traders by design, electricity, gas, and oil. And I think that right at the worst time, Exxon gutted their trading organization on the oil side. Like they basically said we don't need to do it. You had Oxy get out of the fibro trading side, just as they need to be trading carbon like crazy. I could advocate that Oxy's direct air capture is an OxyChem trade, not a direct air capture trade, and happy to talk to people about that offline. And online, it's something I'm writing about. But the reality is like, Chevron and Exxon probably weren't as aggressive in the transition because they didn't think about the electricity trading side as a key lever that you can increase your return on a risk-adjusted levered basis. And I'm curious if you guys witnessed that at all, of like the biggest traders, the electricity companies, the Eons and the Dukes and the NextEras are leading this as well. And they're trading companies, not necessarily project companies. Exxon's a project company, and they think about what's your project level return without the long dated financial side. So just curious how you guys talk about that, think about it. Friday afternoon riff, and then we can all drop off before the close and make some money and watch the Cardinals win, hopefully.
Max, you go first.
I think, look, on the trading side, we're not as in tune with what's going on with the power. I do think that there will be volatility through all of this. I guess try to break things down to a basic level. I think that through all of what's going on, there's going to be volatility. Volatility is good for trading. On the nat gas side, we're really not trying to make a lot of sophisticated bets. Most of what we do is help people navigate these markets and make sure that these sharp traders aren't giving them the right information and that they are accessing the best price for their products. But certainly with all this disruption that's going to be happening, people that are out there that have these trading shops, they're probably going to make money on this volatility, and it's probably going to grow, would be my gut would tell me. But that's not that sophisticated of a take. I don't know, Dan, what do you think?
Yeah, I mean, Hike, you threw me a curveball because I haven't thought about it really that way. And so typically when I get a question I don't know the answer to, I divert it and try to say something different. I think at the risk of, I don't want to be disrespectful to the majors, but because I think they're amazing companies, and they're absolutely in a really, really hard spot because they clearly have a target on their back, a la Exxon and Engine One. So they're going to get pushed to do things that I don't think are necessarily better, creating better returns and better financial results. I don't know that it makes them better companies. I don't know that it makes them better stocks. They have enough money to spend and invest a lot in maybe pivoting their business. And so they'll spend it at exactly a time where spending it in their core business probably makes a lot more money. So to take a line from the old Rocky movie, I think it was Rocky 3 that had Mr. T, right? I pity the fool. I kind of pity the majors right now because they're so big. They're under such a spotlight. They're in a box. I'm just glad. Maybe I'd like to get paid like I ran one of those companies, but I'm glad I don't actually run one of those companies. Hey, before I drop off, I'm looking at the comments in the comment section here. I want to just quickly address a couple things. Somebody made a comment about stuff's always in transition. I agree. Patrick Nash says, has the human race ever transitioned from a more dense energy source to a less dense one? And then answers his own question. The world's talking about trying to do something they haven't done. But I go back to this issue of, I think we're past the tipping point and the effort's going to be made and the money's going to be spent. Is it the right short-term answer? Who knows? Is the right long-term answer? Who knows? But it's going to happen, I think. Danny Juarez says, isn't China's net zero goal further out, 2060 or so? Yes, it is 2060.
Is it real?
Well, I mean,
is their goal real? I mean,
right?
Are they really? I don't know. Is it?
I don't know either. And that 10 years is how you get away with building coal plants right now, I guess.
Right.
The China thing, complete non sequitur, but I'll bring it up anyway. We were talking last night, my wife and I, and she's in philanthropy. And one of the things in philanthropy right now is sort of sustainability and investing in things that help the world move toward a lower carbon future. And so if you think about that, I mean, what a great gig it must be. China's got rich people in the US essentially subsidizing them being high carbon polluters, if you will. So they get to build coal plants, make a bunch of money, ship stuff to us, and we then say, global warming's bad, we've got to spend money to make it better. So there's just a ton of irony in all of this.
You're saying the quiet part out loud, Dan.
Yeah, well, anyhow, so those were good comments. And
well, it's interesting, the last comment about Germany and California. If you just look at Germany was a leader in the solar space in the OOs, and you had a ton of capital destroyed and a bunch of bankrupt companies. And then they exported their industrial side of all the manufacturing of panels went to Southeast Asia. And so you had not only, but I could argue if you're socially oriented, the best thing Germany did for the undeveloped world was they were a leader in solar technology, and now they're bearing the brunt of 3 to 5 times the cost of power versus the rest of Europe and the rest of the world. But they did export something socially that changed the profile of the solar industry. And then the unit costs came down dramatically by cost of labor. And I think that's the lesson that the industry needs to learn as you move into the transition. You got to make the mindset. In the U.S., I sometimes wonder if we actually have the balls anymore to do an interstate project or do a Tennessee Valley Authority or we couldn't get wind transmission across Oklahoma, Arkansas into Tennessee to basically we can't get across the energy transition because of politicians at the local and state level. And we've been thinking about offshore wind a lot recently, and part of the way you have New Jersey offshore wind now is it's further offshore, so it's out of view. And secondarily, it's going to be using a lot of underutilized New Jersey ports, which is a lot of jobs for the New Jersey coast, which I think is an important thing. You got to understand the local politics and create jobs with this move. And then you're making money. Like, then it's an opportunity to see the transition where you can move to a less dense energy source because it lasts for a long period of time and it's maintenance, and those jobs will be there for a long time. And what Germany did wrong was they were a pioneer. They made the investments, and then they let the export that happened through the late OOs drive the lack of the industrial manufacturing that could have been theirs, but moved away. They're still top 3, I think, in solar panels, but top 1 and 2 is our orders of magnitude bigger. And so we just have to make sure policy aligns. And I think about your comment on volatility. The Texas power market, unfortunately, twice this year already has showed its volatility, and that unfortunately is burdening the poorest among us the most. And I've talked about this a lot from an ESG standpoint. Circling this back together, the social side is equity, and like having an equity opportunity and the opportunity across all people, social and economic classes. You've got to be thinking about that from a political standpoint. And we unfortunately in Texas, the governor and the legislature can't talk about it still. It's complicated, but yeah. I think that it's working in some areas. And the offshore wind industry in New Jersey is an example of where it's actually working and projects are moving forward versus projects that got killed by the likes of Lamar Alexander in the past. So I'll leave it at my soapbox moment, but it does feel like there are opportunities.
Yeah, I was gonna say, if you need to go, that's fine. You have to get out of here?
I got one more comment, but if you got one more question, I'm happy to.
I just wanted to hit on this. You made the comment you want to talk about government, and maybe this is loaded, but one thing that I struggle with on some of these things, like for example, carbon capture and some of these, you're talking about multi-billion-dollar infrastructure projects that are going to span decades in terms of their life. And as you're switching through administrations, and if you think about the role of government and all these things, I've traditionally leaned more I wouldn't say I'm a full-on libertarian, but I lean more towards free markets and kind of letting government, facilitating capital markets to work more efficiently versus kind of driving things. But if you look at some of these big projects, it's going to have to be driven by government. And then how do private businesses navigate that when you've got changing administrations potentially every 4 years and relying on tax credits and relying on subsidies and things? Do you think people gravitate more towards things where the subsidies and stuff up front so you can factor that in, but whereas these longer type projects, I don't know, how do people navigate that political risk that's going to be involved with some of this stuff?
It's a good question. I don't know how much political risk there's going to be on some of these things, because it feels to me like there are a bunch of really big things moving forward just on the momentum of carbon offsets, not regulations, just guys saying, I need to do something about this.
Right.
The net zero pledge from a tech company or an energy company. So I see lots of multi-billion-dollar things happening before we even have a carbon price and a carbon market. So, yeah. So I think that maybe that momentum from, I talked about the 4 groups that are pushing, and government being number 4, maybe it will be helpful and may help offset some of the costs. But man, this is not a capital problem. There is a ton of dough that wants to spend on this right now.
Yeah.
So I'm not as worried about 20-year projects and 5 presidents along the way, because I think the momentum around the money is much more free market driven than it is government driven. And the last thing I'll say, and then I'll drop, is one, thanks for having me on your show. The other is what a difference a year makes. Last year at this time, we wouldn't have been talking about energy transition or oil. We'd have been talking about how many more companies go broke. And it goes back to what am I excited about? I'm excited about the fact that now I'm thinking about how to play offense instead of playing defense, hoping the industry's around. And so think we're very fortunate. The COVID vaccine took such a short period of time, because if COVID was still going on, oil would be 30, and we'd be talking about how the hell the industry is going to make it through. So it's just a much more interesting and exciting time. I think a year from now, there'll be more discussion about what's happening in the core oil and gas business, because we'll have a year's worth of, I think, really damn good profitability, and the uncertainty around, well, what does all this energy transition stuff mean? We will start to see some lanes emerge about what energy transition is going to be about. So it's a fun time, and I appreciate you guys including me. And David, I hope the Cardinals win. And Max, thanks for having me.
Dan, thank you for coming.
Hey, you bet. I'm out. Take care, guys. Bye-bye.
See ya.
Everybody have a great weekend.
Add to stream. David, I dropped you for a second. Sorry about that.
Yeah.
I can go for a few more minutes if you want to drop off.
We had one more question that I think you and I can hit.
Yeah, there you go. Cole Daniel. I know Cole. How's it going? It's good that you chimed in. Go ahead, David.
Yeah, so it's basically, what are the new or current forms of energy you'd be most interested or excited to see exponential growth, development, implementation in the next 30 to 50 years? And so I'll let you start, and then I'll give my...
Well, I mean, when he says new or current, I guess if you say current, I think what would be exciting to me is to see just somewhat, I think natural gas embraced more. I think it is got just such a bright future. I mean, I'm biased. I work in natural gas. I think I've said this a lot. I think we can, do a lot of great things. We got a ton of it. We don't have to export or import it from China, any of the raw materials. We don't have to offshore any of it. It's American. I'm put my Aubrey McClendon on here. It's American. It's abundant. It's clean. We've got a bunch of it. We can. One of the main reasons we have lowered our emissions and lowered our carbon footprint is because of natural gas. It can be used in everything from transportation to power generation. It creates all the things around us, right? It's the plastic, these headphones, the huge amount of the things that we interact with every single day is natural gas. And I think it's going to continue to be used. I just wish there was more of a narrative around it in the energy transition. I know a lot of people in our industry push it, but I just mean as a whole, I think that if that narrative would take on a little bit more, I think it would be really good for America. And I think it would be good for decarbonization if that's people's goals. And so that would be what I would be excited to see. I mean, I know there's other things like nuclear and hydrogen and other things that I just don't know enough about how we're going to get those more into the mainstream. But for me personally, it's natural gas, which is my bias. I think we lost your audio, maybe. Can you hear me? I think you're mute right now. Your mic is muted. Hike's having some technical difficulties here. I can't tell what's going on. It's just like shaky. It's like Blair Witch Project. The camera's just shaking around. So this is a good one. I was glad that Dan got to come on as the first guest that we've done. We'll see if Hike jumps back in. If he does, it says devices not connected. They will need to connect the mic and the cam before we can allow them onto the stream. So we'll see if he can figure out the technical difficulties. Either way, it was fun to have a guest. The plan is to, here he goes, add to stream. All right, can you hear me?
Yeah, totally. So I'm doing this from my cell phone, and so I had a call come in. Someone wanted to interrupt our pod, so
got to put it on airplane. No, do not disturb. You got to put it on do not disturb.
Do not disturb. Exactly what I'll do next time. So I'm a lesson learned. The key thing that I think about is energy efficiency, and I don't think that people talk enough about it. I think it's more about figuring out ways to use what we have more efficiency. I think we shouldn't manufacture any air conditioners anymore. I think everyone ought to be a heat pump globally, and because we're going to have to figure out a way to. I talk to guys on the institutional investor side, very large investors that are trying to figure out ways to mitigate climate change, but also trying to figure out ways to make investments whenever we do have warming. And as you think about the people that live, the 800 million people without access to reliable power, they tend to live in pretty hot areas. Like,
Right.
you get into Africa and India, like they're going to want air conditioning and they're going to want a way to cool things. And I think heat pumps are just something that is a very natural thing that the U.S. can lead. Like, you should never replace your HVAC system with a regular air conditioner. Just put a heat pump in as well. It's changed completely in technology, and the LED lights have changed things completely, and people don't talk about it. And I think that there are structural decisions that can be made in how we make investments that are going to change the profile of our energy consumption, particularly as people advance and improve. And I think about, I lived in New Orleans for Hurricane Katrina and our house flooded, but one of the simplest things that Brad Pitt came in and did was say, we're going to build 200 energy efficient homes in the lower Ninth Ward. There was a specific goal that was measurable, achievable, and they at the time were as efficient as anything that was out there. And there's a renewable component to it, but like really it was about making it efficient. And so that's what gets me most excited about it.
Yeah.
Exponential growth of efficiency, not exponential growth of a supply. And that would be the thing that would get me most excited.
I actually think that what you're saying is I was going to say, I actually think what you're saying is actually probably what's really going to happen if you think about it. I think everybody views this, that we're just, like I read this deal about, horses, and it was like we used to have all these horse and buggy, and horses were the main transportation, and people used to predict in the future we're just going to have horse manure everywhere and we'll never be able to, and then we invented the car, and then cars were really dirty, and it's always just something gets better. And so whether that's, I don't think it has to be this big step change like the horse to the car necessarily, but even if you look at cars, it's like sometimes people look at the path that we're on, like that example I was making with the horses, and it seems unsustainable, but what you find out is that technology just finds a way. And so I think what happens is people try to force things, like, and I'll pick on EV a little bit, but let's face it, I mean, hybrids, they're pretty good. I mean, you could get a long ways towards some of these efficiency goals. You can kick the can at least. I mean, I think if you switched everything to hybrids or some form of we've already done it. I drive a truck right now that can get in the high 20 miles per gallon, and it's a F-150 EcoBoost. It's changed a lot even since 10, 15 years ago with V8s. Yeah. So to your point, I mean, maybe those efficiency things are going to get us way further than people realize, and it's not just this big change all of a sudden. It's just a lot of little things that make everything better.
Yeah, I tend to think that, doing the big projects, this loops back to that statement about our ability to do big things. And I still think we're entrepreneurs in a nation, and, we have the ability to incentivize and do big things. And that, I'm not trying to say we can't do that, but I think it's the 1,000 little decisions that happen on the edges that have reduced actual power consumption. So the natural gas industry did a lot for our emissions, replacing coal, but energy efficiency did just as much. And
yeah,
I think that's the stuff that should go exponential. And everybody can make the decision on this on an individual basis. You don't have to put solar panels on your house; just put a heat pump on it. And HVAC 2.0 is the website you can look at. I'm a mechanical engineer. I dropped out of petroleum and got into the oil industry because it was kind of rough in the early 90s, but the reality is I think that's the opportunity. So
it's probably a good way to end it. And I think what are they doing?
They're still down. We're in the middle of the fourth, so 2-3 still. But
I think it's a good way to end it because I think what you just said checks all those boxes I mentioned earlier, right? It makes people's lives better, it drives down costs, and it achieves the goals. And so that's a great answer. But Hike, this was fun, and I'm glad we got to get Dan on. We got another good guest coming here, not next week, but the week after. We won't spoil it, and we're going to try to get more guests on here. But everybody that tuned in and that commented, I appreciate the engagement. It's a big deal, and everybody have a great weekend. And I think that's it.
Yeah, please subscribe, and we'll keep things rolling. So thanks, everybody.
All right. Thanks, guys.